Bankers and economists bet on a bare minimum 25 basis points cut in interest rates tomorrow, even as the central bank grapples with high consumer inflation and stuttering growth. Meanwhile, Finance Minister P. Chidambaram says he is hopeful that the RBI will address the cash crunch as well. Markets trade weak, tracking global cues. The sentiment takes a beating across the globe after Cyprus decides to impose tax on bank deposits. The Sensex ends the day with a cut of over 130 points ahead of the RBI's mid-quarter policy review tomorrow. A breather for telcos. The Delhi High Court says AIRTEL can continue to offer 3G roaming services and needn't pay the 350 crore rupee fine imposed on it by the Telecom Department. The order will have a bearing on other telcos as well. The government moves to avert the crisis over the American resolution against Sri Lanka. Cabinet Ministers P. Chidambaram, A.K. Antony and Gulab Nabi Azad rushed to Tamil Nadu to hold talks with Karunanidhi after the DMK chief steps up pressure on the Congress. A very good evening. You're tuned into Business Day right here on ET Now. I'm Avan Dabash. Well, let's start off with the big story for the day, and that's the day before the central bank this time around announced the mid-quarter policy review. The Finance Minister, P. Chidambaram, has said that he is hopeful of a positive gesture from the Governor D. Subbarao on the liquidity front. The markets, meanwhile, seem to have already factored in a 0.25% cut in the repo rate as well. But will high food and consumer inflation play spoilsport? Simran Gill and Anirudh Ghosh report.
Finance Minister P. Chidambaram believes that the government has done enough on the fiscal front, something even the RBI Governor D. Subbarao has publicly acknowledged. And with core inflation slipping below 4% in February, many expect the central bank may now have more room to cut rates. Never before in the recent past have market players and bankers been on the same page, with all of them expecting a 25 basis point cut in the key policy rate. And even the FM is hopeful of a positive gesture from Subbarao on the liquidity front.
I think Governor is also aware of the issues about liquidity, and tomorrow is the monetary policy, so let us see. I'm sure he will address the issue of liquidity.
But the jury is still out on cut in the cash reserve ratio. Despite a cash crunch to the tune of 1 lakh crore rupees, only 30% of the treasury heads who participated in an ET Now poll expect a CRR cut, although bank heads are not giving up hope.
Our recommendation to RBI would be to make a 0.5% cut, 0.5% cut in CRR and a similar cut in the repo rate.
Let there be a reduction on both sides, probably that will be more meaningful. So I won't say that only, say let's give us a 25 basis point in repo and another 25 in CRR.
That may sound a bit ambitious, but what everyone will be looking forward to is the policy guidance, which will set the tone for further monetary action for the rest of the year. But what could come in the way of an aggressive play by the central bank on Tuesday is the stubbornly high food prices and consumer inflation. Simran Gill and Anirudh Ghosh, ET Now, Mumbai.
Well, in fact, bankers on their part are rather optimistic of not just a policy rate cut, but also some easing on the cash reserve ratio. Let's listen in to what some of the top bankers are expecting tomorrow.
The fact that the government has done its bit in terms of working on the fiscal front, I think it's probably fair to say that at this point in time, the consensus in the market is certainly a 25% basis point reduction, and that's probably already factored into the market at this point of time.
In the course of the year, we would see at least a 0.5 to 1% drop in interest rates. Whether that happens in this policy or not remains to be seen.
I think the things have not really changed drastically than what it was in the past, so I don't expect anything great to happen.
Okay, so all eyes on the RBI tomorrow, and it certainly is a toss-up between a 25 basis points cut or perhaps no move from the RBI at all. But in the meantime, today was disastrous for the equity markets. Although we did manage to recover from the low point of the day, it was still below the 58.50 level. The unusual bailout proposal for Cyprus triggered a global sell-off, and that really played havoc for the equity markets. A negative breath led lower by the rate sensitive. So for the Sensex too, it was off by 0.6% at 19,220 29. The broader markets too, which moved in tandem with the way the equities were panning out, did see a good recovery by the day's close, particularly for the mid-cap index. The small-cap index went home with a cut of 42 points. In terms of sectoral movers, should pull up the bank nifty for you particularly, because after cracking it did recover very smartly from the day's low to end lower by 0.8%. Metals were crumbled in the session, so off by 2.5%. PSU too in the limelight on the downside, but what held up was the FMCG sector as well as consumer durables. Let's pull up some of the big losers for today. Well, Coal India fell flat on its face, IDFC, Tata Power and Maruti Suzuki too in the limelight on the downside. Some stocks in focus today, then Jet Airways. It saw a massive recovery from the day's low of 498 to over 550 as the management clarified that the media reports on the Jet Etihad deal being in trouble are absolutely incorrect and it's only speculative. SKS Microfinance got a good boost as it moved the Supreme Court against the Andhra Pradesh Microfin law, asking Andhra Pradesh not to take coercive steps against the company. The Supreme Court said that SKS Microfinance can continue Andhra Pradesh operations up until the point that the case is settled. All of the oil marketing companies were in focus, the likes of IOC, BPCL as well as HPCL, as there was a cut in the petrol prices by 2 rupees per litre on Friday. ICICI Bank, HDFC Bank as well as Axis Bank, all of those three companies in fact were in focus today on the back of those Cobra Post allegations this time around on money laundering. ICICI Bank suspended 18 employees, HDFC Bank went ahead and appointed Deloitte, and Axis Bank also concerned an internal probe. Brokerages as of now, CLSA has maintained its overweight stance on private banks. Apart from that, in the aviation space, you also had Kingfisher Airlines. That countered down and out as the Airports Authority said that they will be pursuing criminal cases against the company. The metals pack was clobbered in trade, so you had an NMDC, a JSW Steel, a Tata Steel, all of those counters down and out as the global iron ore prices have corrected and are down by close to 11% since the 20th of February. From that space, you also had SAIL. Remember, the OFS price will be decided tomorrow. It's expected to be at a discount and expect the OFS to be launched this week itself. A sharp cut coming in for SAIL. But what held out in today's markets was your classic defensives as well as a little bit of IT flavor. So Cipla held up, HCL Technologies, Siemens was a good outperformer, and you also had HUL which perked up very smartly and was quite a top favorite among our technical analysts for today. Well, in that meantime, let's also hear out some market experts and get their opinion on what the road ahead is for the equity markets.
Whatever data points we are getting, whether it's on GDP, IIP, inflation, all the numbers, loan growth are disappointing. So that disappointment continues. And on the earning front, actually, we have seen some downgrades for FY13. We started the year with 11% growth expectations for FY13. That's now down to 9%. So I guess a combination of macro disappointment, corporate disappointments, as well as the fact that both the consumption as well as investments are slowing down. That's being realized by the market, and therefore, despite such strong liquidity flows, the market continues to sort of go nowhere.
We are obviously calling for about a 25 basis point easing going into the policy, but the fact is, fixed income markets don't seem to be pricing, or probably the probability of a rate cut is being priced at a very low level given the kind of elevated levels of CPI and so on.
Let's also get a sense as to how the F&O activity shaped up for today. Navneet is standing by from our research team. Navneet.
Hi Avan, it was not a good day for the markets. That's precisely on back of negative global cues. You had the Nifty March futures closing just 1 point short of that 58.50 mark, with premium of about 14 points, and the March futures added about 10 lakh shares in today's trading session. Well, if you look at the options data, the Nifty PCR towards the end, it remained unchanged at 1.16 as we saw open interest addition on both sides. On the call side, you saw maximum addition coming in for the 6,000 strike, which added about 9 lakh shares. You had the 5,800 strike adding 5.7 lakh shares, and 5,900 call strike added just about close to 5 lakh shares. On the put side, you saw unwinding coming in for 5,900 and 6,000 put strikes, whereas maximum addition was seen at 5,500 level, which added 10 lakh shares. You also had the 5,600 put strike adding to just about close to 9 lakh shares. And moving on to stock futures, well, as you clearly mentioned, it was the defensives which held out in today's trading session. So the likes of Cipla, ITC and HUL fresh long positions were seen for these these three counters. Well, on the short side, you had Coal India, which was down on as the stock went ex-dividend today, on back of which you saw the stock falling. Short positions were being built up on the future side. Also, it was the cement pack which was weak, so ACC Ambuja, they also built up short positions, and NMDC was down as the iron ore prices fell about close to 10 to 11% from their peak. And on the long side, some of the mid-cap counters held out today. It was Shriram Transport and GMR Infra which did well. Long positions seen there. And in terms of open interest gainers, you had Yes Bank, Siemens and Coal India, where maximum amount of open interest addition was seen today. While talking about the participation, the turnover was about 1.3 lakh crore, which was recorded on NSE.
Thanks very much, Navneet, for giving us all of those details. Well, let's move on to the global picture, which really dominated sentiment on the Lal Street today as well. In an unprecedented move, the Eurozone finance ministers approved a 10 billion euro bailout for debt-ridden Cyprus. But unlike in its past, the rescue has sent the world markets into a tizzy and angered all of the parties involved. Take a look at the CAC. It opened with a gap down and continues to linger under pressure, off by 52 points. The DAX giving it company, and all of the peripheral markets too not being excluded from the sellout, particularly Italy, which is seeing a deep gash of over 355 points. You've got some of the other markets too, like the FTSE, as well as Spain, Greece. All of those seem to be down and out. The euro too is seeing quite a bit of pressure against the US dollar on account of those Cyprus worries, at 1.2 against the US dollar as we speak. In fact, this bailout seeks to levy a tax on all of the bank deposits in Cyprus. The logic being that banks hold a large part of the debt and they should be made to pay. But the money, in fact, will be coming out from the ordinary depositors and not the bank itself. And now this announcement is leading to long queues outside ATMs in Cyprus as people are rushing to withdraw their cash, the fallout of which could be rather dangerous for the entire euro area. Now for Cyprus, this is a case of being in between the devil and the deep blue sea. Here is a special report.
Cash point machines in Nicosia are empty after Cypriots took out money from their banks on news of a proposed 10% tax on savings. The embattled government on Sunday postponed until Monday an emergency session to vote on the proposed bank levy that could see savings of over 100,000 euros hit with the 10% tax. Deposits less than 100,000 euros will be subject to a tax of almost 7%. The proposed tax hikes are part of efforts to generate 6 billion euros to help bail out the country's two biggest banks hit hard by the Eurozone debt crisis.
I feel like everyone else, annoyed and angry at the situation we are facing. We have no idea what we will face tomorrow. The situation is very difficult.
Not good because anyway when you get the money, already you have taxes.
The radical levy would break a previous Eurozone taboo on penalizing struggling banks' depositors.
Okay, moving away from that, you had that effect also play out in the commodities basket, which took a big knock in trades on the back of the controversial bailout proposals. Both copper and zinc, in fact, are trading at 4-month lows on the London Metal Exchange. Our commodities editor, Manisha Gupta, is here with a detailed wrap. Manisha.
Well, thank you so much for that. Yes, as other asset classes also saw the impact coming in from the unusual bailout Cyprus. There you have seen base metals also decline quite sharply, starting with copper, and that one is trading at a 4-month lows on LME and 7-month lows on the Shanghai exchange as well. Same is the case with zinc as well. That one is trading at 4-month lows on LME and 4-year lows on Shanghai market. Apart from what's coming in from Cyprus, there are those concerns that have come back on surface from the Eurozone. You also have seen the strong US dollar putting pressure on the asset classes. Apart from that, if you look at the CFTC data, the latest one, that shows you that the speculative positions or the net shorts have hit a 4-year high. So there are very less people out there who are actually putting money or betting on bullish prices in case of the base metals there. Apart from that, what you have to look forward really is the fine print coming in from the Eurozone. You also have the FOMC meeting starting for the 2 days from tomorrow onwards, and of course the Chinese demand that also has been on the lower side, putting pressure further on the prices there.
Thanks very much, Manisha, for giving us all of those details. So havoc playing out across all of the asset classes, even commodities not being spared. It's a huge relief for Bharti Airtel. The company will be able to continue its 3G services and will in fact be able to add new 3G customers. The Delhi High Court has also put a stay on the 350 crore rupee penalty slapped by the Telecom Department. Gauri Dwivedi now joins in with all the details. Gauri, certainly a sigh of relief for Bharti.
It's a huge relief for Bharti Airtel. The Delhi High Court today decided to not put a stay on either the services that are being offered by Bharti Airtel, the 3G services in the 7 circles where it does not have 3G spectrum, and nor has the Delhi High Court put a stay on the penalty, the 350 crore rupee penalty that has been slapped by the telecom department. Well, the government's view is very clear on this, that the roaming pacts entered into between Bharti Airtel, Vodafone and Idea Cellular are illegal simply because they do not have the spectrum in which they are offering services and adding customers. But the Delhi High Court agrees with Bharti Airtel's view, and in fact it has gone ahead and said that the company can continue to offer services and even add new customers in these 7 circles. Definitely a huge relief for Bharti Airtel. More importantly, Idea Cellular and Vodafone will also take cue from this, given the fact that they are also likely to be issued notices pretty shortly on this matter.
Thanks very much, Gauri, for giving us all of those details. Well, moving on then, and after the blockbuster IPO 3 years ago, the country's largest coal producer is said to be the big-ticket divestment for the next fiscal. Nearly 10% stake in the coal major is likely to be offloaded in the first half of FY14. The government aims to rake in 20,000 crores via this divestment, and the CCEA will approve the stake sale initially, and the EGOM will be constituted to decide on the route. All of this news put the stock under great pressure in today's session, which was off by close to 5.5% to shut sharp at 302. Meanwhile, power companies in India are clamoring for tariff hikes, with fuel costs escalating and forex fluctuations impacting the project costs. Big power generators like Reliance Power, which just commissioned the Sarsan plant, is in consultation with states for an increase in the rate. Even JSW Energy is finding it difficult to sign PPAs with the state governments in the absence of the tariff hike.
If there is a change in law, we're supposed to be compensated. If the cost, if there's some particular tax has gone up compared to when it was at the bidding stage, and we're supposed to be compensated for the higher tax, it's exactly in line with the PPA. Therefore, we don't see any reason, any problem for the getting this accepted on this. It's a consultation process which CRC wanted us to do. We will go ahead and do it and complete the process.
It is impossible for any generators to supply power on a continuous basis without escalation at a fixed price of, let us say on the case of imported coal, people have quoted 2 rupees 50 paisa or so. Now it's impossible to supply power on a long-term basis at 2 rupees 50 paisa when the tariff is increasing and the costs are increasing. So no state government actually is coming forward for the longer term PPAs at this point of time.
Shifting gears to the auto space, and Mahindra & Mahindra today unveiled its electric car, the E20. This eco-friendly passenger car will cost you close to 6 lakhs, delivering a mileage of close to 100 kilometers per charge. The E20 will be produced at Mahindra Reva's Bangalore unit, which has the capacity to roll out 30,000 cars per year. Mahindra's plans to price the E20 slightly above other premium hatchbacks like the Maruti Suzuki Swift and Hyundai i20 took a hit as the government was reluctant to grant subsidies to electric cars. Let's hear out Pawan Goenka about the same.
Our work on sustainable energy, whether it's electric vehicle or hybrid, is not being done so much from the point of view of what impact it will have on top line or bottom line, at least in the short term. It is looking to the future, it is changing the future of mobility, and therefore what we hope that what we're starting today is a small step. If it succeeds, it could then become at some point of time, 10 years, 15 years, 20 years from now, something significant contributor to our business overall.
Moving on then to some national news, and as the DMK arm twists the government over the upcoming vote on Sri Lanka at the UNHRC, 3 cabinet ministers have rushed to Chennai to placate Karunanidhi. Kamal Nath says Karunanidhi's suggestion and objections will be addressed. With that, we come to an end of this edition of Business Day. Thanks so much for watching. Keep it with ET Now.